Hello, my name is Patrick Ray. I'm the CEO and co-founder of CanopyBoulder, and today we're going to talk about investing in the cannabis industry. So let's talk about that. But first, let's get to the data. So cannabis is becoming the most popular issue in the United States. According to the latest Gallup poll information, when they asked, do you think the use of marijuana should be made legal or not? Recently, we crossed the 2/3 threshold. 66% of Americans say yes, marijuana should be made legal. That is up from even 36% in 2005, 50% in 2011, and just 58% a few years ago. And it's not just Republicans, it's not just Democrats. Cannabis crosses political lines. We're seeing support from Republicans, independents, and Democrats increasing and into significant territory. It's also generational. The majority of Americans support legalization of marijuana across all age groups. And there is regional support. The East, the Midwest, the South, and the West, they have all seen positive changes in their support of cannabis. Why? Because cannabis is safe and it presents a generational wealth opportunity on par with the gold rush, the end of prohibition, the dot-com boom, and all despite challenges facing the industry like IRS Code 280E, limits on advertising, rules around social use, and banking being more difficult than in most other industries. And we'll get back to that later. And the data around sales is fantastic too. The US or North American cannabis market is expected to cross $24 billion in sales in 2021. Now, there's been a lot of talk about the global opportunity in cannabis, but we encourage you to do your research and understand the relative sizes of the United States market opportunity compared to the Canadian market opportunity compared to the rest of the world. The opportunity here is in the United States. So as an investor in the cannabis industry, where do you want to invest? Do you want to invest directly into the plant, indirectly into ancillary products and services companies? And if you're going into businesses and states in certain markets where there are limited licenses, is that where you want to invest? Or do you want to invest in open and legal markets like Colorado and California? Certainly, you need to make your decisions. And what sectors, subsectors, and niches of the industry will you invest in? Have you done the research? Do you understand where AI has strong and weak investment opportunities, or when processing is the right sector or part of the supply chain to invest in versus cultivation? Today, we're going to talk about a lot of things. We're going to talk about valuation trends. We're going to talk about investment opportunities and managing your risk in this industry. Again, my name is Patrick Ray. I'm the CEO and co-founder of CanopyBoulder investment fund. We began back in 2013. We have a fantastic team of professionals that are veterans in the industry, investing in startups, and we run a 16-week business accelerator and boot camp for entrepreneurs in the cannabis industry. Since we launched, we've raised 5 funds and are raising another. From 70 investors who invested in companies that have created over $200 million in value for them. Our teams have raised $50 million from outside investors, creating the #1 business ecosystem in the cannabis industry based right here in Boulder, Colorado. And why we've been able to do it is we've had the support of great mentors, folks who are in or interested in the cannabis industry. These are alumni, advisors, investors, and industry pros who help our teams get more done faster. Since we've launched our first fund, we've made 110 investments in 90 companies, and the performance to date is significant. We're very proud of our track record. So how do we get it all done? Like we said, we have a very specific sector focus and expertise. We do extended due diligence on the companies, and we do active mentoring, all prescribed by the Kauffman Foundations as ways to increase return on investment in early stage investing. And we have an incredible ecosystem that everyone plugs into. We'll talk about all of this and more in future podcasts and webinars, so please definitely do check in. Before we get into the nuts and bolts, I want to really talk about disclaimers here. The industry is changing fast, and I know what I know. We know what we know, and it's changing every day. What we thought was okay and legal yesterday has changed. What brought us to where we are as an industry is not going to take us into the future. So understanding that is critical. So what you're going to hear about in the presentation is the best information we have right now. So let's take a step back first and understand early stage investing trends in the United States, not just in the cannabis industry. For early stage VC and angel investments, we saw a peak of deal activity in and around 2015. And going forward, what we've seen now is decline in the number of deals being invested in, but the same or higher dollar amounts going into deals. Here's another way to look at it. The capital invested continues to go up at a rate twice that of the number of deals growth. So again, more companies are receiving, or fewer companies are receiving more capital than we saw in 2015 when we saw a lot of mobile app development where a lot of startups were getting invested in. So let's talk a little bit about some trends in the cannabis industry. So there's two primary sectors that we're looking at here. Ancillary products and services, that's where CanopyBoulder focuses. We're seeing valuations that are quite realistic. Seed, late seed, all the way up to Series D, where we haven't seen too many deals yet because the industry is still young. But monthly recurring revenue is driving valuation, along with discounted comps to mainstream or conventional comparables. Now this is ancillary, data, software, tech, media. When we get to businesses that touch the plant, valuations are all over the map. In Colorado, we're seeing state licensed businesses, cultivators, processors, branded companies, and dispensaries trading at 1 times last 12 months revenues. In other states where there are limited license opportunities like Pennsylvania or Florida or New York, you're seeing valuations range from who knows what times the dream and or whatever you can get. And whatever you can get has been pretty impressive. In the industry investing in cannabis, the payoff is real. Even in the ancillary products and services sectors, we're seeing acquisition activity. And, you know, there's been a lot of attention paid to the public markets in Canada because the Canadian market has been federally legalized. There's been an enormous rush of investment dollars into that sector. Most is coming from retail Canadian investors, not as much from institutions. And however, we may have seen the peak and it may be coming down. So if someone's telling you the next peak is coming, you might want to think twice about that recommendation. So again, we've been in the market since 2013, and people ask us all the time, what does the industry need? What businesses are going to be successful? Ideas are worthless. Execution is everything, and the industry needs everything. Beyond just product, flower, extracts, edible, all the support services, the data, software, tech, the infrastructure of the industry is needed. So where are entrepreneurs launching? Well, in the US, they're not really launching public companies. If they are, those public companies are actually going up to Canada and they're raising money on the Canadian Stock Exchange, where there are no limitations to bringing that capital back to the United States. So activity in the US public stocks has slowed down. Perhaps investing in real estate, certainly somewhere where you can park a lot of cash and you can expect good, steady returns. There's even a couple of publicly traded REITs, but the returns are not green rush returns. They are not 10x. They are preferred returns over standard real estate deals, but not what I think everyone's expecting. What about hemp and CBD? Very interesting space. The Farm Bill projected to legalize hemp and CBD in 2018 or 2019. That's going to be a major event for the US cannabis industry and is something that we are watching very closely. You might want to grow cannabis, and who wouldn't? Look at this stuff. It's a lot of fun. However, in legal markets, we see the wholesale price of cannabis, the key metric in cultivation business models, declining rapidly. When Colorado legalized in 2014 for adult use consumption, prices were around $3,000 a pound. Now they are trading wholesale pounds at about $850 a pound, and there is no bottom in sight. You may want to infuse products and sell edibles. A lot of fun here. And what I like about this space is there's an opportunity to build a good brand. And brands are where we're going to see value created in the future for businesses that touch the plant. Last but not least, a dispensary. And often when an investor or a consumer engages with the cannabis industry, the first engagement is often a dispensary. And these can be cash machines. However, remember, they're still federally legal, and IRS Code 280E stipulates that any business trafficking in a federally scheduled substance, like cannabis, will pay taxes on gross profit, not net profit. And with retail, you have high expenses in employees and real estate. So retail can be tough until the laws change. Then you have ancillary products and services. Like I said before, this is where we at CanopyBoulder have focused our investment activity. You see classic tech vectors in valuation and growth, global market scope, and increasingly in demand by the industry, which is not being served by players like IBM, Google, or Facebook, who are not going to participate. And you get venture fund returns, 10x and beyond. Here are a few of the companies that we've invested in that are industry leaders and proven that there is opportunity to be very successful in ancillary products and services. So let's talk about the risk. Clearly, this is a risky market. How do you want to mitigate these risks? And let's talk about some of them. Federal intervention, raids, going out and taking people down, making a big example of them. I think there's still some potential for that, but the resources available to the federal government to do this in a meaningful way are slim. People in the industry say that the risk, perceived risk, is much higher than the actual risk. What about big corporate entities coming in and taking out your startup, throwing $300 million against the idea that you're pursuing? Right now, companies like McDonald's, Microsoft, and even Google aren't really participating in the industry for a very simple reason that their operating agreements don't allow them to participate in federally illegal businesses. So that presents incredible greenfield growth opportunities for entrepreneurs. People talk a lot about banking, and banking isn't easy, but banking is getting better. There are more and more banks serving the cannabis industry, and there's more and more software companies helping them navigate this challenge. And then some of the other risks are investing in the wrong people, this guy or this guy. As in any industry, there are good players, good actors, and there's bad actors. And knowing who's good and bad is critical to making good investment decisions. Also, the industry's legalization is moving very fast. In fact, what we thought was the rule and the norm yesterday has probably changed already just today. And it's hard to keep up and make sense of all these developments. So if you're going to be investing in the cannabis industry, you need to show up. You need to show up and understand what's going on. This is not an industry that you can probably invest significant amounts of capital into without the benefit of a professional manager or without going full-time in yourself. So what now? What does that mean? How do you avoid catastrophic losses? Well, I think like any other industry, it's all about diversification, because you can have the greatest race car, but the wheels can come off when you're not paying attention. So how do you do this? How do you mitigate risk, diversify your holdings, rapidly deploy your capital before the industry opportunity passes you by, get in at good valuations, get follow-on investment opportunities and information rights. It's not easy. I'll be honest with you. As an investor, it's difficult. There are a lot of folks out there, who are saying they're running professionally managed funds. But the truth is, there are many people trying to run professionally managed funds. So my advice to you is just buyer beware and do your due diligence. Look for folks who have a long track record in the industry, large networks, good deal flow, and are what you're looking for, not your buddy who's decided that he's going to run a cannabis fund. So let's talk really briefly about CanopyBoulder. We have been very active in the market since 2013, made our first investments in 2015. The companies are doing really well. We've made 110 investments in 90 companies, and we're really proud of what we have accomplished here in what is arguably the center of the industry, Colorado, the largest, the most mature legal market in the United States. So that's a little bit about investing in the cannabis industry. If you have any questions, I'd encourage you to reach out to me. My phone number is 303-261-5496. You can also reach me at patrick@CanopyBoulder.com. Thanks for your time, and please do come back and tune into more of our content about investing and entrepreneurship in the cannabis industry. Thanks.